Good morning, everybody. Hopefully you had a wonderful weekend. We'll go ahead and get started here. So 5Q tape breakdown. Sometimes trying to help a client can actually cause friction. See how that can happen and how to fix it. And this is something that many of us do. So this is well worth listening to if you haven't listened to it. Anybody know who William Bengen is? Anybody know who William Bengen is? He may not be famous for what he did. Nick's got it. Good job, Nick. Yeah, everybody's getting it now. Yep. So he's the 4% guy, right? So he was an MIT grad in mathematics and aeronautical engineering and a CFP. And back in 1982, he came up with the 4% rule, looking back through time. So now, I'm sorry, 1994, he came up with it. So how much did he recommend in stocks? 75%. He recommended 75% in stocks, 25% in bonds. And he found that starting with the principal of $1 million, pulling out 4%, that you'd have a 90, I think 95% chance of being okay. So you still have these five chances of being not okay, but 95% chance of being okay. Now, what happened to that 4% rule in 2000 and 2008? 2008. People who would follow that 4% rule in 2000, 2008, what would have happened to their portfolios? Yeah, it didn't work. They would have failed. They would have ran out of money 30 years out, or more like down here, 5, 6, 7, 8, 9, 10 years out. Yeah. So what does he recommend today? How much does he recommend in stocks today? Because he redid all the calculations, redid all of that, and guess what he recommends today? It may sound familiar to you. Yeah. Drum roll, please. 50%, 50%, 50% safe, 50% stocks. Does that sound familiar at all to you? So guys, there's so many. I mean, you've got Ibbotson, Bengen, and just you've got Benjamin Graham. And if you don't know who Benjamin Graham is, please read his book. You should not be recommending anything stocks to clients if you haven't read The Intelligent Investor by Benjamin Graham. He was Warren Buffett's mentor. They all recommend 50-50. So we're in very, very good company. Analysts who predicted the 2008 crash warns of a bubble brewing in the U.S. household wealth. So the orange is GDP. The orange is GDP, and household wealth is that where's most of that from? Housing or from stock market? I don't have all of the article, but guess where they're finding most household wealth is? Stock market, not housing, because housing took it on the chops. But what's been happening to the stock market the last? Jeff, what did you say? What's the latest from 2008 to current? What's the latest? It's up how much?
It's over 300%. I think it's around 305%.
Is housing up 300%, Jeff? Since 2008?
Oh, no.
So guys, it's not housing, it's the stock market, right? Market's 310. So there's been a divergence between GDP and household wealth. So what's the problem with that? What's that telling us? Credit, I'd agree with that, Mark. Credit, what else is that telling us? Is the stock market realistic as compared to how much the economy is actually growing? So when the stock market is not realistic as compared to, it's ahead of itself, exactly. So what happens when it gets ahead of itself? Anytime something gets ahead of itself, what happens to it? Guys, you ever heard of reversion to mean? What's going to happen to this? And then you've got household net worth as a percentage of nominal GDP. Here's the average since 1951. And again, we've gotten way above average in the 90s. Then we came back to more average. Then we got way above in 2006. Then we came back to average. And where are we now, right now, guys? And this guy's point is that we're not just in a bubble for the stock market. We're in a bubble for housing, bubble for stock market, bubble for credit. And what's happening to the U.S. debt right now? That tax cut that we got, that was supposed to create all sorts of growth in the economy. It's created some growth in the economy, but has that lowered the deficit and debt, or has it gone way up? My God, it's like talk about people who are using other people's money as a checkbook. So the primary, the analyst says the primary driver of this bubble are common stocks, which have been on a years-long march higher that includes those held by big mutual funds. He says extremely inflated equities drive up the wealth. Excuse me, I'm going to sneeze a second. Excuse me. Extremely inflated equities drive up that wealth, and but such as in prior busts, they drag it right back down when a bear market or decline of at least 20% from the recent market peak takes hold. Colombo believes equities are overvalued on several fronts, such as favorite indicators of Berkshire Hathaway's Warren Buffett total value of stock divided by GDP. Total value of stock market divided by GDP, which is that chart we just looked at, or the chart we just looked at, demonstrates that, which shows the market more overvalued than it was during the halcyon days of the dot-com era. So, household wealth versus GDP. Look at how much more over we are now than we were in the dot-com, during the housing, and look at where we are now. So, again, was this last little correction that we had last week, or the correction we had in January and February this year, did that reset the bull market, or are we still at the end? There were blips, yeah. So we're at the end. So the market is still way too high. Has it reset? Now, do we know when it's going to reset? No clue. Could be tomorrow. Could be 2 years from now. But is it going to be 7 years from now? No. It's not going to be 7 years from now. And when will we figure out that it's reset? When will we figure out? Yeah, after, Dick. After the fact. So that means we should be timing and trying to squeeze the last bit out of the market, or now's the time to get into that 50-50 at least defensive stance. So if you've got folks still in the bonds right now, still overweighted in the market, dudes and dudettes, take care of your clients. Do the right thing. Remember, what's our job for our clients? To get them the most money possible, or to maintain their lifestyle, despite no matter what happens to the economy, no matter what happens with the market, they can maintain their lifestyle. That's our job. And you're not going to do that by trying to squeeze the last little bit and time the market. Can we time the market? No. Nobody can time the market. So we need to be getting defensive right now. We're getting into a more sane stance right now. So the main topic of the day is, how do you handle this guy, the do-it-yourselfer? So we're going to listen to a tape review. But before we do, let's talk about these do-it-yourselfers. There's two types. One is the single guy or gal, and one is the couple. And the single person is a do-it-yourselfer. Why? Because they love it. They love it. And if I come across a single do-it-yourselfer who loves it, yeah, that's exactly what I'm going to do, David. What am I going to do with a single do-it-yourselfer who loves what he's doing? Try to convince him. Yeah. See, what's my chance of getting this guy? Yeah, I got a 1 out of 10 chance of getting this guy. Do I want to waste my time on a 1 out of 10 chance? No. So they go away. But the other single do-it-yourselfer is the person who's given up, saying, you know what, I give up. This is I'm too busy. I'm doing things that this is no longer fun, or I've just gotten beat up. I need somebody to take this over. Well, I'm going to obviously work with him. And then do-it-yourself couples, do I work with them? Absolutely, I do. And I go for a specific dollar amount. Specific dollar amount. If we go back to this gentleman here, who's a single do-it-yourselfer and loves it, I am still going to show you, if you are not in front of enough people and you're going to take a chance on a 1 to 10 chance, I'm going to give you a tool today to raise your chances of closing this guy significantly. So before I used to say just walk away from this guy, but I'm going to show you a tool today that's going to give you a much higher chance of closing this guy. So if you're not busy and you can afford to spend the time with this guy, I'm going to give you the tool to go after him. That tool can also be used for these folks, which is going to increase your closing ratio with those folks as well. So The agreement meeting do-it-yourself formula. Let's talk about that first. So the first thing we're going to tell them is that there's a difference between a client with a broker and a client that's a do-it-yourselfer. And then we're going to compliment them on how fantastically brilliant they are at investing and how great a job they've done. We're going to do what? What do we call that, guys? Got some. Yep, we're going to got some. Then we're going to say, I can't afford to educate my competition. I'm going to ask them, are you going to go into competition with me? You're going to actually become a financial planner, hang up a shingle, and start doing that. That's the next step. Then we're going to say, now the real reason you came in is why. What's the real reason they came in? Especially a couple. We're going to assign them. You know, we go back to, remember when we talked about Dale Carnegie and how to win friends and influence people? You want to give people a reputation to live up to. When you give people a reputation to live up to, guess how many of them will accept that reputation rather than reject it? If you give them a sterling reputation to live up to, guess how many people will accept that sterling reputation? Yeah. Most, but I would say, I think we're closer to all than most. Most people are not going to reject that sterling reputation. But I'll go along with, I'm certainly not going to argue with most either. So we're gonna talk about how we do that. Then I'm going to say I treat you different than other people with brokers, and all I require is a certain amount of money, and I have them explain why I do that. That's the template. That's the template. And then I'm going to give them a summary. So why do I only, why do I require a certain dollar amount? That's what we're going to do. Okay. So we're going to listen to a tape of a gentleman doing this script with a client. So here we go.
Well, for people in your situation, people who have a broker, I require to put together a plan for them. I require that they move all their money to me. Can I tell you why? I probably spend $70,000 a year keeping up on continuing it.
Okay. So far, did he just talk about the people with a broker, or did he let them know there's a difference between them? Did he mention there's a difference between people that are do-it-yourselfers and people with a broker? Or did he just say, if people have a broker, here's how I deal with them? Yeah, so let's go back and listen. We got some wrong answers there. I want you to listen to this again.
Well, for people in your situation, people who have a broker, I require to put together a plan for them. I require that they move all their money to me. Can I tell you why?
So did he talk about a difference there? No, he did not. Why is that dangerous at this point? Why is that dangerous at this point? See, they're do-it-yourself. These folks are do-it-yourselfers. So why is it dangerous that he didn't? Yes, David. Well, the reason being is David says he's going to jump to others to protect themselves. So what they're going to do is they're going to assume that he's talking about them. See, you don't know the background of these people. He's already determined. Guys, do we know they're do-it-yourselfers from the first meeting? Yes, we know they're do-it-yourselfers. So he knows they're do-it-yourselfer. He's looking at their statements. He's already been. This is at the end of the agreement meeting that we do this. So you want to let them know there's a difference between people who like them and people that have brokers. There's different. So Jeff, can you come on the call here a second?
Yep, I'm here.
Okay, so Jeff, there's actually, when it comes to folks, I treat people a little bit differently. For example, folks like you, who do it themselves and have done a great job doing that, I treat you differently from people that have brokers. People that have brokers, I require them to move all their money. But people like you, that's not even an issue. You're doing a great job with your money right now.
Okay.
So what am I doing there, guys? See, if I just go, so Jeff, people that have brokers, what I do is I require them to move all their money to me. What's going on in your head when I do that?
Well, I'm wondering if I'm going to have to move all mine too.
Yes. Even if you don't have a broker, what are you wondering? And what do you want to jump in and tell me?
Well, why do you have to move in all your money?
Yeah, and I don't even have a broker, so why does that even apply to me? And see, it's going to get you defensive. And do we want people to be defensive? No. So I want to tell them up front that I treat. And again, I roll in number one and number two together. I roll in number one, two together. So Jeff, when it comes to helping folks, there's two different types of people. One type like yourself who does it themselves, and another type who actually uses an advisor, etc. If they have an advisor, I'm going to require them to move all their money. But somebody like yourself who's doing a great job managing money, that would be foolish. You're doing a fantastic job. In fact, if I, and the one thing I love about do-it-yourselfers is how much time and effort and focus do you have when you're managing your money, Jeff?
I mean, I spend quite a bit of time on it.
Yeah. And how many different people's accounts are you taking care of? Just yours or a whole bunch of people's?
No, just mine.
Yeah. So if you were taking care of 300 accounts versus just yours, are you going to be able to focus as well on just yours, or if you're trying to help 300 people?
No, well, I can do better if I'm just looking at my own.
Yeah. So why in the world would I require you to move all your money to me? That'd be crazy. I mean, would that make any sense whatsoever for me to ask you to move all the money to me?
No, I don't think so.
Yeah. But with people that have advisors, do I want to educate my competition?
No.
So if I help somebody that has it, now, first of all, guys, did I compliment them, and do they know there's a difference between them and the way I treat other people so far? So does Jeff think I'm going to go after all his money at this point? Does he feel boxed in, or does he feel like we're cool right now? Does he feel boxed in, or that we're good right now? Yeah, we're cool. So now I'm going to say I've gotten to number 3. I say, but can I afford to educate my competition, Jeff?
No.
So if somebody already has a broker, and I give them all sorts of great ideas, and they bring those ideas back to their current advisor, what's just happened?
Well, now he knows everything too.
Which means I've just educated who?
Your competition.
Yeah, and I spend probably between $10,000 and $15,000 a year going to different conferences, different educational courses that I take to stay abreast of what's happening. And would that be fair for me to work with a person who had, not like you're doing a great job, you're handling yourself, but if somebody had a broker and they took all my information back to the other guy, would that be fair?
No.
And why wouldn't it be fair?
Well, you're the one that spent the money and you took the time to do all that stuff. It wouldn't be fair for somebody else to just, get it for free.
Yeah. So why do I require them to move all their money to me?
Because you don't want them sharing your ideas with anybody else.
That's it. I don't want them sharing my ideas with anybody else. But you're handling your own. Now, are you going to go into competition with me and open up a financial planning firm?
No.
No. So if I give you information, am I educating my competition, or am I just helping you out?
No, you're just helping me.
Yeah, and I don't think that's a problem whatsoever. So I think, the reason you came here is not because you need my help. You're doing a fantastic job. Sure, there's a little thing here, a little thing there. We talked about some ideas that you hadn't heard about, and that we'll certainly cover those. But even without those things, how well are you doing right now?
We're doing pretty good, I think.
Yeah, you are. I'm not going to argue with that at all. You're doing really well. So the real reason you came now, I don't know about your household, Jeff, but in my household, when we're washing dishes, both my wife and I get into that washing sink and we both wash the dishes, and then we put them in the dryer, and then we both fight over who's going to dry the dishes. Is that how we do it, or does one of us wash and one of us dry?
No, one person washes, one person dries.
Yeah, and when we're mowing the lawn, we both fight over which side of the handle we're going to have. My wife gets the left and I get the right, and then we both waddle next to each other mowing the lawn. Is that how we do it, or when I'm mowing the lawn, she's blowing off the driveway, or she's clipping the hedges? How do we both do the same thing, or do we split the chores?
No, you split them.
Yeah, you split the chores. And I've been working in this industry for 3 decades now, and I find that when it comes to investing, guess what most people do when it comes to investing? Split the chores, or both jump in with both feet and fight over what the next thing they're going to invest in?
No, usually they split that too.
They split that. In fact, I take care of all the investing in my family. My wife takes care of all the bill paying with the checkbook. So when it comes to bills, guess what I don't have any clue about?
What's in the checkbook?
No, and how much we're spending. Right. But when it comes to investing, guess what my wife doesn't know anything about?
She doesn't really know anything about the investments.
Yeah. So is that kind of how it is in your household?
Oh, yeah. I mean, I handle it, and she kind of takes care of everything else.
Yeah. So I think the real reason here is not because you need my help right now. You're doing great right now. What you're looking for, and see, guys, out of role play, I'm going to now set up a sterling reputation for Jeff to live up to with his wife right beside him. So what you're really here for, I mean, first of all, Rochelle, she takes care of, does she just sit around the house, or she's also doing way important things you're doing the investing? Is she just sitting around, or is she doing way other important things in the house?
No, she's doing other important things.
Yeah, so I don't want to, out of role play, I don't want to short shrift Rochelle and say she's an idiot and she's lucky to have Jeff and all that. I'm going to say they're splitting the chores, okay? So the real reason you're here then is not because you need help now. You just want to make sure you start to set up, yeah, we've got some of these other things, these 6 things we talked about. We'll certainly give you that information. But the real reason you're here is not because you need my help right now, but because you'd like to start to set up a relationship with somebody who, Rochelle, you can trust, who speaks a language that you can understand, who can step in if something happens to Jeff. So the real reason here is not because you need help now, but because you want to start forging a relationship over the coming years that you can have somebody you can trust if you need somebody to step in down the road. Is that the reason you came, or is it because you need help right now?
No, we don't need help right now. It's more just to make sure we have somebody that we can kind of rely on in the future and keep things going.
So, Jeff, when guys have used this, how often do people say, "Oh, I can give a crap about my wife"?
No one says that. No one says that. Not if she's there, and even if she's not, they don't say that.
Not if she's there. Yeah. So, and did I short shrift Rochelle, or did I say she takes care of other things, and I'm engaging her in the conversation? And what did I talk about? Get her the highest rate of return, or somebody she can trust, somebody who speaks a language she can understand, somebody who has patience. See, what I'm doing is talking about the language of what she would be looking for. Does that make sense to everybody in the call? Can I get some Y's for yeses or N's for no's? Super. Good. So now I'm on to the real reason came is then why, Jeff?
Well, to make sure that we have somebody that we can kind of rely on if anything ever happens to me.
Yeah, that's why I treat you differently. With brokers, they have to move how much of their money?
Oh, all of it.
They have to move all of it because I don't want to educate who.
Oh, your competition.
But you are not going to go into.
No, we're not. We're not going to compete. We're not bringing on anybody here.
No. So I don't require you to move all your money. All I require is out of your $800,000 that you'd move $200,000 if and only if we found something that made sense to you. Now you might wonder why. Why is he doing this? Well, I have a cap on my clients. I only will cap my clients at 200 clients, and that's because when they come on, do they want me to take good care of them, or they want me to forget that I take care of their money and ride off in the sunset?
Oh no, they want you to take care of them.
When they want me to pick up the phone, they want me to pick up the phone how quickly?
Oh, right away.
And they want me to watch their accounts closely, or not watch their accounts closely?
No, they want you to watch them closely.
Yeah. So that's why I have capped it at 200. I can do those things. I can give great customer service. I can watch their accounts closely. I can be proactive and look at their accounts and say, we need to make a change if I only have 200 clients. But if I brought on 400 clients, how much time would I get to spend with them? If I bring on twice as many clients, that means I have to do what to the time I spend per client?
You have to do twice as much. You have half as much
which
time.
means that there you go, half as much time. I have to do twice as much, so I get half as much time. And is that what they signed up for?
Oh, no.
No. So should I if I make a promise to somebody, should I follow through on that promise?
Oh, absolutely, yeah.
So if I promise them that kind of customer service, I should what?
Well, you should deliver.
Yeah. So I found that if people have a minimum of $200,000 with 200 clients, I can make a good living and be a good advisor to my clients. If I have only half as much as the requirement, if I only have 100,000 as a minimum, guess what that means I have to do to my clientele?
You have to have twice as many people.
which means they get half as much what?
As much of your time.
Yeah. So why do I have that $200,000 minimum?
Well, to make sure that you can keep your practice small.
Yeah. And why do I want to keep my practice small?
So you have time for everybody.
Yeah. Give them the service they want. So I guess the question I have for you, and again, we haven't even looked at anything, but if we found something that you liked, that met all your parameters, that you thought was a good idea, would you be able to move $200,000 out of your $800,000 if it made sense to you?
Well, as long as it made sense, yeah.
Yeah, because if it doesn't make sense, you do what?
Well, I'm not doing it.
What if it made a little bit of sense? What if I said, I can make you an extra $25 a year?
Yeah, no, not interested.
It has to be a little benefit or a big benefit?
No, it has to be a big benefit.
Big benefit. But if that had a big benefit, I mean, you keep managing $600,000 yourself, but if that had a big benefit, what would you do with the other $200,000?
Well, then I'd let you manage it.
Yeah. So, guys, did I get him to tell me he would let me manage? Now, is that $200,000 in black and white number? No. Somebody said they lost sound. Can I get some people to say yes if they hear me? Okay. Good. So that's just he must have a problem himself. So do you see what I did there? So now, who told me that the minimum of $200,000 was reasonable? Did I tell him or did Jeff tell me? Yeah. So he told me. So he's bought in. Does that make sense? Do you see what we're doing there? So you'll do that at the end. After the goals. You do it after the goals. After they decide they want to move forward, then you're going to say, okay, if we move forward, I need to know, are you considering even moving any of your money to me? And did I lock them down, or did I say that they'd move money for sure, or if there was a small benefit, or they'd move money if there was a what? Big benefit. Now, here's the thing. He said that out loud. Now, if he tries to waffle on me at the implementation meeting, guess who's going to step in? The wife will step in. Absolutely. You're right. The wife will step in. Because say, you said you'd move 200,000. Let's move. And the reason she steps in, does she really think her husband is a genius when it comes to investing? Keep in mind, she's been married to him for decades. She's seen him try to trim the hedges by grabbing the lawnmower by the sides and trim the. She's seen him climb on the ladder and do. I mean, she's seen him do all the stupid things in his life. Does she really think that she's in good hands when it comes to the investment? No. It's just that does she feel she knows enough to call him on it? Does she know enough about investing to call him on it and say, you don't know what you're doing? No, she doesn't. So I'm throwing her a lifeline. And again, after the 21-point checklist, what is she deciding? That he is, or now she has proof that he is not doing a good job for their investments after the 21-point checklist? Not. So I just need to get this commitment at the agreement meeting so that at the 21-point checklist, he's going to have to throw the entity he's working with under the bus, and now she's clear that, yeah, you can throw Vanguard under the bus, but guess who really was the idiot there? What is she thinking, Vanguard or him? We're giving them both an easy out. He's going to throw Vanguard under the bus, but guess what she's thinking? I knew you didn't know what you're doing. Is she going to say that out loud, or is that just going on in her head? Just going on in her head. So then when we go to the implementation meeting, she's decided she wants me involved. So if he tries to waffle and say, well, I'll give you 10 grand, we'll see how you do with it, what is she going to step in and say? You said you'd give him 200. We got tape after tape after tape of the spouse who does not manage the money telling the spouse who does manage the money, you need to follow through on your commitment. Okay, so let's see if jump back in here, and we're going to listen to it. It's about 10 minutes, and we're going to listen to see if he's doing these things. Okay, so here we go.
Well, for people in your situation, people who have a broker, I require to put together a plan for them. I require that they move all their money to me. Can I tell you why? I probably spend $70,000 a year keeping up on continuing education, and
So again, we just talked about it. Did he make sure they understand the difference, or did he leave opening for them to get defensive? by not making it clear he was not talking about them. You got to make it clear you're not talking about them. You're talking about the people who, with advisors, I treat this way. The people without advisors like you, I treat you differently. You got to make sure that's up front. And then did he jump right into the reason to compliment, or why he can't educate competition, or did he compliment them on how great? See, why am I complimenting them there? I'm complimenting them there because then it shows I'm on their side. I'm not trying to get them to move their money because they're doing a great job managing their money. All of those things, which alleviates a defensive stance.
Travel away from my family probably, maybe 3 weeks a year to different. I was on in Minnesota last part of last week. And so just so I can be up to date on what's going on so that I take care of senior issues. Mm-hmm. And I can't afford to educate my competition. So a lot of times I'll see someone who has, money with a broker, and then they'll say, well, how about if I just leave half of it to you and leave the other half to my broker? Well, then what's the broker going to know? They're going to know everything that I do. Is that fair? No. I don't think. But for people in your situation, are you going to open up your own financial planning firm and go into competition with me?
Heavens no.
And I wouldn't think you would.
Yeah.
So in people in your situation, I don't require that to become clients that you move all your money. Mm-hmm. But I do have a minimum of $200,000. Okay. And the reason for that is...
So to see, how's he doing, guys? He's skipping. He skipped the difference between the two. He skipped the complimenting them. He did tell them he couldn't afford to educate them. He did get them to tell him that they weren't in competition with him. But then he didn't get them to tell them the real reason they came, to lock them in. Instead, he goes right for the money. And so right now, do we have the wife on his side? Is the wife on his side at this point? Is the husband on his side at this point? All he's doing is kind of laying down the law. So we compliment them to get the husband on, both of them on your side. Okay, you got to compliment them to get them both on your side. Then you have them tell me the real reason you came, to get the spouse on your side. But when you just lay down the law, guess what? You don't have them on your side. You don't have them calm and collected. You don't have them thinking this is a good thing for all of us. Instead, you go right for the money. What's it sound like you're doing? Laying down the law. Without getting on their side first, that's a problem. So would you add anything to that, Jeff? I don't know if I'm explaining it very well. Apparently not.
Well, my cursor was acting weird and trying to unmute. No, you have to. Mike's exactly right. You have to be upfront and let people know exactly how this works and what's going on, or otherwise they're going to think there's something weird about it. If you do it the way it's laid out, it seems perfectly natural and perfectly reasonable. And you have to do it at the agreement meeting. I get a lot of people that come and say, oh, I'm working with a do-it-yourselfer and I didn't do this. Should I do it at the next meeting? And I always tell people, you got to be careful. Otherwise, it sounds like, last time I met with you, there are no strings attached. Now you're starting today telling me there are strings attached. What gives?
Because what's on the table right now, Jeff?
Nothing.
Nothing. So how easy is it for them to agree if there's nothing on the table?
It's very easy.
But like you said, that's a great point. If you wait till the end, now it sounds like what? You're still following the same rules, or you're changing the rules as you go?
You're changing the rules halfway through.
So this is a process you got to start from the very beginning. That's a great point, Jeff. You got to start from the very beginning. Make sense, everybody? So I'm going to jump forward here. I want to hear what. So can we agree that he's not following this script? But let's see what happens here. I'm going to jump forward.
Pay the tax as if you had sold it, even if you still hold on to it.
I didn't know that.
Now it's a fairly new development, and it's not the kind of thing so far that the IRS is knocking down your door saying you should do it. But technically, they made it so.
So at this point, he's trying to get them, giving them another reason to come back. Is that when we should do it, or should we have that discussion before we even begin this conversation? Now, he didn't have the 6 goals because that was a fairly new thing that we're doing. So he's trying to do it differently. But if we had the 6 goals, do we just do the 6 goals before this or after this, guys? Make sure everybody understands that. Before or after this? Dale's got it right. Phil's got it right. Nick's got it right. Okay, yeah, everybody's getting it right. It's before. Don't try to do this and then start to give them more reasons to come in. They already should want to come in. Now you're going to lay down the law. Because do you want to tell them what the price of something before they want it or after they want it? Do you tell people the price of something before they want it or after they want it? Before. I'm sorry. No. Sorry, you're right, Nick. I'm wrong. After. You tell them the price after they want that thing. So you do the goals before, and then you tell them the price of it after. And the price is they don't need to move all of it, but they need to move some of it. Does that make sense? I'm going to jump forward here a bit.
And well, Yep. I mean, I would like to see it, even though we're pretty sure that it is out of date. But
yeah, sure.
And I need that information for about a week.
Okay.
And I put together that assessment, and we go from there. So, you want to go home and think about it.
Okay.
How much time do you think it'll take you to, I just don't want to have this hanging out all. You're looking at the box there.
What about? Oh, we should know by Friday, do you think?
No.
Or? Oh,
Okay, so he did ask them for the $200,000. Because he screwed up the script, guess what they said? I can't give you a commitment. Okay? So he's saying, well, when are you going to give me a commitment then? Now, if they're not going to give him a commitment, is he doing the right thing to kick him to the curb? Because there's nothing on the table. If they won't even give you a commitment when there's nothing on the table, what's going to happen when there is money on the table? They're certainly not going to give you a commitment. So he did screw it up. So he didn't get the commitment, but at least he knows up front that they're waffling. So let's see what happens.
gather all the stuff? Yeah. Oh.
Or at least decide what you want to go forward.
Yeah.
How about a week?
Okay.
Just a week.
Say,
Also, why is the wife not saying we need to move forward? If he'd done what part of the script would she have been insisting moving forward? What part of the script did he miss that if he had done it, she would have been saying, well, I think the real reason. Very good. The real reason, Sue. Exactly, David.
before Thanksgiving or after Thanksgiving?
Maybe after. I forgot next week's Thanksgiving.
Yeah,
Yeah,
after
yeah, after
Thanksgiving. People get it.
Maybe after Thanksgiving.
Yeah,
Okay, so the week after Thanksgiving, is that fair?
that's fine.
About it. And then we're not going to bug you and call you and bother you.
Okay.
But is it okay if we haven't heard from you by then, so I just give you a call if you want to.
Sure.
We can shred this.
Yeah.
So what he's saying there is, if I don't hear from you, guess what? I'm shredding this stuff and we're done. What does that let them know? Why does he do that? Are we using some principle of psychology there? He's doing the right thing there. He's saying, so you know what? If you don't want to move forward at that point, no worries. Goodbye. See ya. I'll shred this stuff, and you know what? We'll both move on. So it's the takeaway, right, Kevin? It's the takeaway. The takeaway, Nick. Exactly. Make sense? So that's how we're going to do the agreement meeting. Okay, I'm going to zip through this. Oh, so now what are we going to do at the 21-point checklist? So that script is for the agreement meeting. Now we've got their agreement. They're going to, if we come up with a good idea for at least for $200,000, they'll move at least that. Does that make sense? Now at the next meeting, the 21-point checklist, how do we go after do-it-yourselfers? Who is the bad guy? Who is the bad guy at the 21-point checklist? With a do-it-yourselfer. David's got it. Nick's got it. Yeah, Kevin's got it. Bonnie's got it. Yeah, Sue's got it. It's the company. If they're working with the 401k company, it's the 401k company. If they're working with Charles Schwab, it's Charles Schwab. If they're working with Fidelity or Vanguard, it's Fidelity or Vanguard. You let them assign the blame to that company. Because once they've got a choice, they can either say that I'm an idiot and I did it wrong, or they can throw the company under the bus. Which one are they going to choose? When they're assigning fault, are they going to choose themselves or the institution? They're going to choose the institution. And I love do-it-yourselfers. Here's why. Who's answering the phones? Highly qualified CFPs, chartered financial analysts. Who's answering the phones, guys, at these companies? High-powered advisors or worker bees? Worker bees. Worker bees. Workers making what, 15, 20 bucks an hour. And are they coming up with things on top of their head, or do they have a script to follow? On their computer, are they seeing what they're supposed to be doing on their computer? Is the company telling them what they should be doing? Guys, that's even dealing with do-it-yourselfers is even more powerful with an advisor. Because if I'm working with an advisor with Edward E. Jones, and that advisor is doing the bad thing, you know what? Could Edward E. Jones still be a good company, but it's just a rogue advisor? Could that be the case? But here's the thing. If I'm working with the worker bees and they are following scripts, who told them what scripts to follow? Who told them what scripts to follow? The company did. These people did. And these people told these people what to do. And this person told these people what to do. So if there's a problem with the way the worker bees are acting and what they're doing and what they're covering and what they're not covering, that's a problem with the worker bee, or that is a problem with the whole entire institution. It's with the company. It means that company is rotten to the core. It means not just some rogue advisor. It's not just rogue advisor. They're following a script. They're being told by the people at the top what to do. And the people at the top said, don't give them this form unless they ask for it. They said, don't set up their beneficiaries like this unless they ask for it. Don't set up the titling unless they ask for it this way. Because the people at the top want to make the most or the least amount of money possible for their company. And do they have any connection whatsoever to you as an advisor, as a investor? So they just want to do what? You're just a what to them? You're just a number to them. And so they tell the worker bees. So is that? Do you get why it's even more nefarious with a nonprofit, with a very profit, with these Vanguards, Fidelities, and Schwabs? It's even worse when they do things wrong, because all the worker bees are doing is what they're told to do. So if the people at the top really want to take care of their investors, what would be in the script? You should set up your accounts this way. Let's use this form that we can bypass probate. Let's make sure your beneficiary is set up. Do they do that at all? No, because they're rotten guys. You should not walk away from a do-it-yourself because you think there's nobody to blame. It's even I keep saying nonprofit. A no-load entity is even worse than an advisor. Do you get that? A no-load entity is even worse than an advisor. Why? Because this is coming from the what? The way that these worker bees are conducting themselves is coming from the what? The top, right? The top. So they're rotten to the core. That's what you want a client to tell you. Do you get that? Does that make sense? Good. So now, how are you going to treat things differently at them? So we understand now how we treat things differently at the agreement meeting. Now we understand how we're going to treat them at the 21-point checklist. Now how are you going to treat them at the implementation meeting? Are we going to go for all the money at the implementation meeting? No, we're going to go for what the agreed amount was. So, do we go after the stocks at all? Because what does that guy think about? When it comes to his stocks picks and his mutual fund picks and all, whatever he's doing there, what does he think about himself? That he's a genius. And how much fun does he have choosing those things? Lots or not very much fun? Lots of fun. So we do not go after the equities. But how much do they love researching bonds and fixed assets? They don't. They hate it. It's boring. So what I do is say, keep your equity money. So Jeff, keep your stocks. You're doing a great job with that. And how much information is there out there for you to research stocks, Jeff?
Well, there's quite a bit.
There's lots.
There's a lot.
And in fact, Yeah, in fact, you can basically get the exact same information that the biggest mutual fund manager, the biggest money manager, the exact information they're getting. Guess what you can get?
Probably a lot of the same.
The same information. So you're doing a fantastic job because you're taking that information and doing what? Making good or bad decisions.
Good decisions.
And those decisions are based on throwing darts at the dartboard, or you using your brain. You're doing analysis. You looking at the research and deciding for yourself what the best investments to be in are. Throwing darts at the dartboard, or you doing analysis?
No, I do quite a bit of research.
Yes, and research requires what?
It takes time and energy and brain power.
Information.
Yep.
And information. So when it comes to equities, I think you should keep managing those yourself. But here's what you need to know. When it comes to bonds, guess how much of the information is available to the public when it comes to bonds?
Probably not as much.
And when you say not as much, guess how much not as much? Most of it, or a very fraction of it?
Just a fraction, I'm sure.
In fact, you're right. It's just a fraction. The rest, all this iceberg, this is all private information. In fact, if you go to Wall Street, guess who the rich people are? The stock traders or the bond traders?
The bond traders.
The bond traders. You're smart. You got it. Very few people get that answer right. It's the bond traders. And it's the reason being is because they get information nobody in the public gets. Have you ever seen any research, any newsletters, any Morning Stars, any type of whatever analyzing bonds for you?
No.
No, because it's not available. They keep that under the surface. So guess who's going to win every single bond trade? The investor or the people that have the information?
The people that have the information.
So I don't care how smart you are. If you don't have that information, what kind of decisions are you going to make? Good or bad?
Not good, just bad.
Just bad. So I think you should continue to manage the stocks because you have information or you don't have information.
No, I have a lot of information with that.
And you can analyze that pretty well, or you're not?
Yeah, we can analyze it. I can analyze it.
Yeah. So you should keep managing that. But when it comes to bonds, can you make good decisions if you don't have that information?
No, not if you don't have the information. No.
Yeah. So let's do this. Let's work together. You take care of the stocks, and guess what I'd recommend that I help you with?
The bonds.
Because guess what I have access to?
Oh, you have access to the information.
Yes. So you would take care of what?
I'll take care of the stocks.
And I'll take care of the what?
The bonds.
Yeah, the safe portfolio. And do you remember what we said? How much should we, last time we met, and we just reviewed it, how much did you say should be into growth and how much should be into guaranteed?
About 50-50.
So you're going to take care of what percent, the 50% that is in what?
The stocks.
And I'm going to take care of the 50% of that's in what?
The bonds or the safe.
And why does that make sense?
Well, because I can get the information for the stocks, but you have access to the information on the bonds.
Does that seem like a fair way to go?
Yeah, that seems fair.
Yeah. Because otherwise, you're working half the stuff you know very, very well, and half you're working in the what?
In the dark.
Yeah. And when it comes to that guaranteed stuff, do you want to be working in the dark?
No, I don't want to be in the dark on anything.
Right. So how do you think we should move forward?
Well, I'll handle the equities and you take care of the rest.
So would you like to see what I'd recommend for the guaranteed side?
Oh, yeah, definitely.
Boom. Then I'm into what, guys? So when it comes to the implementation meeting, so we have a script for the agreement meeting. At the 21-point checklist, we're going to do what? We're going to allow them to throw the company under the bus, and we're going to have them tell us that that's even more nefarious because those things that they're hiding on purpose is coming not from some rogue advisor, but coming from the top. And then at the implementation meeting, we're going to have them allow them to brag about how great they are with stocks, but how many people are going to brag about how great they are when it comes to bonds and the guaranteed stuff? Nobody. And then we get them to tell us that it's because they're stupid that they can't manage it. Why can't they manage that guaranteed stuff their own? Because they're stupid? Why? Why do they tell me they can't manage the bonds on their own? No info, that's right. They have no information. So I don't care how brilliant they are, do they have any comeback for that? Is there any comeback for I can handle it? So they don't like it because it's boring. They don't like it because they don't understand it. But this gives them out saying that what? I'm going to give it to you because I don't have the information. I could do it if I really wanted to, but I don't have the information, so I'll go ahead and let you take care of it. If I wanted to and I had the information, I could do it. But because there's no information, I'm going to let you take care of it, Mike. Does it let them have an out with their wife so they don't look like an idiot? So do you get now, does this help you better understand how we get do-it-yourselfers? Is this helpful? Awesome. Good. So we will post this on the coaching call, and we'll also post this under the archive library. And if you run into a do-it-yourselfer, it would make sense to, you don't need to listen to the first 10, 15 minutes of the call, but to walk through this again, just to lock these things into place. We have the agreement script to get them to commit to a certain dollar amount of money because they're really there not for themselves, but for their spouse. And then we get them to throw the company under the bus because they're rotten from the company's rotten from the top. And then we get them to commit to just moving the guaranteed stuff. Okay? Super. Well, I hope this is a helpful call. You guys have a wonderful rest of the week, and we will talk to you all next Monday. Thanks, everybody.